Hello and welcome to our YouTube channel Finbuzz Learning. So today we are going to discuss about capital market. So, in a very easy word we can say that the capital market is a place where individuals and firms borrow funds using financial securities like shares, bonds, debentures, debt instruments, etc. In capital market buyers and sellers also indulge in trade of financial securities. These funds are basically borrowed for medium and long term. Now we will discuss about the types of capital market. So basically, there are two types of capital market, which is primary market and secondary market. So let me explain both type of the market to you. Starting with primary market, it is a place where the issuance or creation of the financial security take place. IPO is the best example of the primary market, where the new security got created and private company sells shares of stock to the public for the first time. Now let's understand the types of primary market. The first and important type of primary market is public issue, in which there is issuing security of a company to the public at large. It is done mainly via IPO. The other type of primary market is private placements, where company offers its security to a small group of investors. Coming to the next type, preferential issue. It is the quickest method available to companies for raising capital. Company issues shares or convertible security to the investors. Qualified institutional placement is a type where a listed company issues security in the form of equity shares or partly or wholly convertible debentures to the qualified institutional buyers. Another type of primary market is right issue and bonus issue, in which there is a issuance of security to the existing investor by offering them to purchase more security at a predetermined price. Now we will understand the functions of primary market. The main and primary function of the primary market is to organize offer of a new issue which had not been traded on any other exchange earlier. We can take the example of Zomato or Paytm, which recently raised the capital from public through new issue offer, which is also known as IPO, and got listed on the NSE and BSE exchange. Now the next function of the primary market is underwriting service, where the underwriter purchasing unsold shares if it cannot manage to sell the required numbers of shares to the public. After completion of new issue and underwriting, the process of distribution started. It invites the public at large to buy a new issue and provide detailed information on the company, issue, and involved underwriter through prospectus. Moving into the next type of capital market, which is secondary market. The secondary market is a market where investors buy and sell securities they already own. It is what most people typically think of as the stock market, though stocks are also sold on the primary market when they are first issued. The national exchanges, such as the New York Stock Exchange, NYSE, and the Nasdaq, are secondary markets. Now coming to the types of secondary market, we have basically two types. The first one is stock exchange. These exchanges are centralized platform where the buy and sell of the security take place. These venues are strongly regulated. For example, NSE and BSE are regulated by Stock Exchange Board of India. The other type is over-the-counter market, which are decentralized and non-regulated. This is also a venue where the sell and buy of financial instrument takes place. FX forwards are the very good example of over-the-counter market, where the currencies get exchanged with the underlying exchange, which is a FX rate. Let's understand the functions of secondary market. So, the major function of the secondary market is to provide the platform where the buyer and seller meet and transact with each other. It also determines the price through the demand and supply. Also, the secondary market facilitate the investors to do the buy/sell of the security into the organized exchange as well as over the counter. The secondary market also facilitates the liquidity of the second-hand share, which you can easily liquidate the shares with the cash in no time. Thank you for watching our video. Hope you like our video. Please like, share and comment on our video, and yes, please don't forget to subscribe our channel for the further new videos.